Joining us from Sydney is Andrew Su. He is CEO of Compass Global Markets, one of Australia's largest foreign exchange brokerages. Andrew, thank you very much indeed for joining us. Well, we thought it was all done and dusted. It doesn't look like that now, does it, again?
I don't think anything's going to be done and dusted until Greece actually defaults and leaves the Eurozone. So, look, we've got Merkel and Sarkozy saying at many occasions that they won't allow Greece to default, and yet you've got all the European finance ministers and all the bureaucrats jumping up and down saying that Greece is not doing enough to get its financing package. So you can only have it one way or the other, and I think what Merkel and Sarkozy have done have handed Greece a free pass in terms of the politicians agreeing to whatever austerity measures are required to get this financing package. But again, they're just kicking the ball down the road.
OK, well, of course, there comes a point, surely, when Greece says, well, we can't do any more than this. We might as well just leave the euro. Do you think that's anywhere near that point?
Look, I don't think Germany and France will let that happen, so we'll see it drag out for another half a year or so as they struggle to meet their targets. I mean, this is a country where tax avoidance is a national sport, so we've got to take a common sense approach to this and say that, look, if situation is getting harder and harder and the economy is getting worse and worse, unemployment is rising and there's pressure on spending, what's going to happen is that Greece is going to fail to meet their budget forecast going forward, and they will eventually have to leave the Eurozone. So I think what's happening is that everyone's just buying time at the moment as the ECB and the IMF and the EU all work together to ensure that the contagion doesn't spread. So I think what's happening now is that they are working on plans to ensure that Italy and Spain don't go down the same path as Greece. In the last couple of weeks, we've seen more political debate over the exit of Greece in the Eurozone, and I think it's a case of where there's smoke, there's definitely fire. So I think what's happening at the moment is that everyone is looking to buy more time so that there is an orderly default in Greece and that it doesn't spread to Greece, to Spain and Italy.
Yeah, well, as you say there, you know, we've got a lot of cuts in the pipeline at the moment when it comes to Greece. Also looking ahead to 2020, some of the targets that are in place there are just unsustainable or just not reachable if things go on the way that they are, according to loads of economists that we've been talking to. So is it really a situation where it's death by 1,000 cuts for Athens?
Look, I think it is. I mean, Athens is trying to avoid default. They need to get this money to pay off that big bond payment on March the 20th, and they'll do anything and say anything to get the money to extend the deadlines. But in the end, it will be a death by 1,000 cuts, but what we'll see is probably a rise in nationalism, and we'll see political leaders start screaming and shouting and saying that we're losing our national sovereignty. We'll see increased political and social chaos in the country, and that's going to lead to only one thing, and I think we're going to see Greece leave the Eurozone sometime this year.
But it doesn't necessarily have to really be passed on to Italy or Spain here as well. I mean, for instance, we had some better news for Europe. We had Italy, successfully selling something like 6 billion euros worth of bonds in an auction, and at a lower cost as well. And don't forget, this is a country which was just downgraded too, and this happened yesterday.
Absolutely. These are good signs. These are signs that the institutions and the ministers in Europe are making headway in terms of Italian and Spanish debt, and that's a good sign in the credit markets. So I think this strategy of probably allowing the financing to go ahead by the 20th is to buy more time to ensure that the effective measures are in place to ensure that Italy and Spain don't go down the same path. But remind you, they've got also significant problems, and now it's not a matter of fundamentals anymore. It's a psychological play, and markets can be very, very volatile, as we saw, you know, at certain times last year when you know, the issue of Europe arises.
Andrew, thank you so much for that. Andrew Su there from Compass Markets.